This is the Game of Fintech podcast. I'm your host, Peter Warren, and my co-host with me today is the Queen of Social Media and Financial Services, Nicole Smith. Hi, Nicole.
Hello, welcome everyone.
Good to be back. And I'm pleased to introduce our guest today. Things never really stay the same in financial services or certainly technology. And building technology for this sector has been really difficult because it's highly regulated and continues to go through periods of very turbulent reforms, and there seems to be more possibly on the way. So to that end, I couldn't think of two better guests to have on our show today to talk through these issues. I'd like to welcome Selin, Ertac and Conrad Travers from Tangelo. Welcome, guys.
Hi guys, great to be
Thanks
here.
for having us.
Good to have you here.
So we've got a lot to talk about because there's been a lot happening in financial services, technology, regulation, and a lot to get through in 40 minutes. But I think it'd be good. You're both really well known through the industry, but there may be some people who haven't heard of Tangelo. So really keen to talk about yourselves and how you started Tangelo and how you look after clients. So I'll hand to you guys.
Absolutely. Well, I might kick off first. So as we were just discussing, I've actually been in the industry for almost 20 years now. So predominantly working in licensee operations and training, managed shared services teams for a number of licensees that I worked for. And more recently, or prior to starting Tangelo, I was actually the head of advice development at IWF. So ended up being an SME on a number of regulatory projects, internal projects, mergers and acquisitions, advice integrations. So the whole gamut. And I've actually grown up through the industry through all the regulatory change and somehow ended up finding a spot within it where I just wanted to be a part of the solution and try and solve for it in a different way. Which is kind of how Tangelo ended up coming to be, really. We just wanted to think about consulting in the compliance and regulatory space in a different way. We just wanted a fresh approach to consulting work, which is how Tangelo was really born. But might maybe just get Conrad to give his brief intro first, and then we can delve a bit more into, why Tangelo.
Yeah, hi everyone, great to be here. So yeah, Conrad Travers, originally from New Zealand, so don't hold that against me, mate. But yeah, worked in Amsterdam, Wellington, Auckland, Amsterdam, Sydney, and Melbourne across a number of different financial institutions. Worked for 10 years for ANZ, supporting the salaried head office channel there. So was there during the Royal Commission, dealt with the fee for no service issues, dealt with a number of ASIC issues, and sort of came across to IWF. So we were supporting not just the salary channel, but also the aligned channel around interesting things like incidents, complaints, control testing, governance frameworks. I've managed shared service teams that look after standards that support financial advisors. So most of the shared services in the industry, Selin and I have managed at some point. And then I guess 2019, we just saw a gap in the market for someone who could help at the licensee level address and fix problems. So what I mean by that is we don't really want to be sort of like the big four consulting group where they sort of come in and give you a shiny report and leave. And we don't really want to be sort of auditing files or being an RM in the license. We actually want to help at the licensee level identify gaps and then practically help them close gaps. So that can be anything from policy to projects or people or whatever that licensee needs to get to where it needs to be.
And it's interesting. You guys started the business because it was a pretty interesting time because all the banks pretty swiftly exited financial advice. So it's amazing how swiftly they exited, actually. So banks seem to be pretty good at getting out of businesses, not so good at getting into them. These licensees are pretty much at the front line. They are now the major providers of advice in Australia. What are your sort of observations with now potentially some of these licensees getting a lot bigger than what they used to be and really potentially being in the spotlight of the regulator moving forward? How are they feeling at the moment?
Yeah, well, I think
I'll go first and then
go for it.
You jump in. I was going to say they're just feeling overwhelmed. Everyone's overwhelmed. Like if you look at capability, capacity, you think about the changes that we've been through around the ongoing service changes, the DDO and breach and incident changes, practices, values have been affected and revenue is down. And people are looking for solutions because the regulatory environment that we're living in with, 7 different regulators and mountains of reg guides that are not being read, SOAs that are not being read. Like it really is a little bit too hard for the average financial advisor to know simply like, what do I need to do to establish best interests and have a great conversation with a client. So I think it's encouraging with the quality advice review, and I know we'll speak about that later, that the government is taking that seriously, because I think we've gone too far one way.
And I think it's interesting too. We've now got this other kind of factor of timing of advice and of requirements, with things like managed accounts, whereby we've introduced even another layer of complexity that actually has a flow-on effect to income, to both the dealer group and to the advice practice if you miss it. And I think that's, I'm sure that the large licensees are certainly concerned about that and how they continue to manage that. Would that be correct?
Yeah, absolutely. And I think we've seen, and it's really clearly highlighted through the quality of advice review report as well, that the magnitude of change that has impacted this industry has been massive. And the industry has evolved and it's shifted, yet the regulation hasn't really been reviewed or relaxed. Even things around best interest duty, I mean, that kind of came in to offset a lot of the requirements that were previously in place, but those things haven't necessarily been stripped back. So it's just become layer upon layer upon layer of regulation, overthrown with, what needs to happen at a licensee level. So some of these licensees are getting bigger and therefore their business is getting more complex. So therefore they need to scale for that complexity in the business, which means that they then themselves put in place additional risk measures and controls, which again just makes it kind of not really workable in a practical sense, but you need to have those governance structures in place to protect the X number of advisors that are operating on your license.
And I think, like, I don't know about you guys. Sorry, Pete. The whole interpretation issue is, I kind of feel at the core of it, that you get why the big dealer groups, the big licensees do this, because they have various people that interpret ASIC legislation specific ways, and they've got a lot of people that they need to protect. But then you go to another licensee and they might interpret it slightly differently and then have a different type of perspective on it. Like, that must be a really difficult thing to tackle, both as a licensee and as you guys dealing with them, because they must all be doing it slightly differently and wanting to add these extra layers of complexity.
Yeah, and I think just from the benefit of being with a large licensee when all of that did happen, like I think obviously the big four, AMP and IWF, used to account for sort of 80% of the market, and then when the Royal Commission and 515 and these types of things came through, some of the requirements were not kind of optional. So a lot of the times these things were rolled out to advisors who didn't always understand why the licensee was doing it. And in some cases, behind the scenes, you've got a regulator saying you need to do this or we'll close your license. So maybe reflecting back, the change management of that could have been better, because I know now there's the view from the self-license and individual licensees that licensees themselves have complicated things. But if you hadn't seen things behind the scenes, you wouldn't understand maybe the reasons why. Does that make sense?
And some of those licensees now do have, quite stringent frameworks because of the fact that they are supporting, circa 300 to 500 to 1,000 advisors. That looks completely different to someone who's maybe running their own license and only has 5 advisors in the practice. The smaller end of town also have a requirement and a responsibility in running that license, in interpreting the regulatory guides and making sure that it's implemented into their businesses. And Nicole, I think you nailed it when you said everyone has a different interpretation. And that's part of the problem that we see, is that it is very open to interpretation, even when we're dealing with, licensee clients or their legal teams. Everyone does have a slightly different interpretation of it. So it makes it really difficult to have a standardized approach across the industry.
Do you, I guess, you've worked with a broad section of licensees. I mean, I guess there's always been some criticism that licensees are often doing the same things replicated across the industry. Are you sensing that there's an opportunity for better cooperation between licensees to potentially standardise share some resources, rather than reinventing the wheel every time? Is that a reality that could happen?
Absolutely. Like if you look at it, we've gone from 29,000 advisors to I think 17,000, and I think that's going to go further down with the FASIA changes and things like that. But if you look at that and say, well, how many licensees? I think there's around 2,500, something like that, licensees, but 80% of them have less than 5 advisors. So you think about the long tail of that, and you think about how we could be better lined up as an industry if we would share resources better. For me, a cybersecurity policy is a cybersecurity policy. Like, why don't we have one across the industry? And a file note template or even an SOA template. Like, I think we think SOA templates are differentiating, but you talk to clients, they're not reading them. So, like, why can't we as an industry kind of try and get together and share that in a better way where it doesn't differentiate the proposition? Would be my comment.
And because I think you're seeing this move from big licensees to self-licensing purely to get away from this interpretation versus the need to give to improve the value of advice or improve the value of their service delivery. And so it's like, well, if you could just remove that need for someone to get their own license because they're sort of running away from this over complexity, well, then that could free up time and resources and all the rest of it for people, practitioners, to focus on delivering advice, which a lot of them just want to do that versus running the complexity of their own license and business as well.
That's where it also leads to a number of efficiencies in the industry as well. I mean, if we can't even get the hygiene factors right and consistent across the industry, Peter, in your world of technology, it would be impossible to try and have a systematized process when we can't even fundamentally agree on the hygiene factors that should, be across the industry, whether it's around, regulatory interpretation or policy or advice templates.
Yeah. I think that's not a bad segue to the quality of advice review. And there's been, and I certainly would encourage anyone listening to this podcast who hasn't read the terms of reference to do so, because I think it is actually written in fairly plain English and can be read quite easily. That's the first thing. But I am really keen to unpack some elements of that review with you both. It's very easy to politicize things like this, particularly in an election year, but let's resist the urge to, and rather than politics, let's focus on practicality around the review. So I just want to start off by asking you both, in terms of the terms of reference, are there any key areas you feel that potentially have been missed or that need to be broadened to actually achieve some of the things you've been speaking about before?
Oh, look, I think it's really important to look at this review and consult and together with the Law Reform Commission's review of the Corporations Act. That's the first point, because I think that's also looking at Chapter 7, which on its own is one of the largest pieces of legislation in Australia. So that's huge. But I think when you look at what they're trying to achieve, you could probably add more and more and more into it. But then at some point you've got to stop it and say, look, how can we give Australians access to higher quality, affordable advice? So I think that's an admirable goal. Michelle Levy's well set up to manage this. I think when you look at some of the terms of reference, they are looking to streamline regulatory compliance, and I think that's obviously needed. We know that FASIA has now moved into ASIC and Treasury. We know that the TPB is no longer as important, but even with that, if you look at the ASIC reg guides, the Privacy Commissioner, Austrac, as well as licensee-owned standards, there's still a myriad of too many regulations. Let's just be honest, it's just too much to understand. So streamlining that and getting back to what I think is important, which is really about advice and the client. And so what's important for the client and their objectives and where they want to go with their lives, and then thinking about disclosure and all those other aspects secondarily. So I think one of the things that we'll chat about today is we really support obviously the splitting of product advice from non-product advice. So thinking about a client situation holistically and how you can help them around budgeting, estate planning, around their entire world. And a product solution may fall out of that, but I think the way that the Corps Act has seen that as being quite narrow, and that's been limiting to the extent that people are getting these 80-page SOAs when they really don't need it. They need something simple that explains what they need to do.
Yeah, and 'cause as soon as you start to dip your toe into that product advice, it's really like that's when the costs come in for an advisor to deliver the advice, and so that's when a lot of clients get cut out, isn't it?
Yeah, and not every client needs that complex level of advice. I mean, I think we were previously talking about the fact of, some clients should really be getting advice, but we've basically, in order to try and protect the client, we've made it not even affordable for the client segments that actually really need the advice, that would benefit from the advice, to actually obtain advice. So it's around the, clarity of the documentation and potentially ineffectiveness of the disclosures. So how do we actually make the advice documents more fit for purpose?
And I think in addition to that, sorry, Pete, just around moving towards principle-based legislation, like I just really think the safe harbour steps don't really work. Like if you look at the safe harbour steps, step 1 through 7, I think it's created by someone who probably hasn't sat in front of a client, because a conversation can go wherever it needs to go to get a better outcome for the client. So the thing for us would be around things like advisors using professional judgment about the advice that they give and how it puts that client in a better position. How you get there doesn't really matter, as long as you adequately scope the client and provide those, that holy trinity of the fact find, the file note, and the SOA, and that they talk together. Because one of the things we consistently find across the industry is that advisors are fantastic at having that conversation and really bad at documenting it. So, like, if we can find ways to make it easier for them to document it, I think half of our problems go away. And that's technology, that's systems, that's processes. But again, getting back to those 2,500 licensees all engaging the tech providers individually, that won't be solved unless we come together.
There's been some criticism from certain cohorts of the industry that that not enough attention has been paid to the vertical advice models that are in place. I mean, you've worked with some of these organisations. I'm keen to understand, firstly, should the issues get muddied up, or are we right to sort of say that the business model is kind of one issue of many, or should vertical models be looked at in a different lens potentially?
Probably one of many issues, but I think in making advice inaccessible and expensive, I think we've almost found ourselves in a position where product providers and manufacturers are looking to get back into advice because there's a whole cohort of unadvised clients. So I think in almost establishing this structure of trying to move away from vertical integration, we've almost pushed the issue back down the other way where, those players in the market that have deeper pockets to fund the cost of advice tend to be in a vertical integrated model. So for me, it almost seems as though, now we've opened up a whole new can of worms for something that we were trying to stay away from, is actually now getting product providers back into advice.
Yeah, just to add to that, I think it's a shame that Hayne didn't deal with it. I think that was an opportunity missed, to be honest. And Nicole, you brought up the managed accounts piece, and the one piece that I think that we're a little concerned with around that would be the dealer groups have got their own SMA or MDA platform, and the best interest issues that are as a result of that. Like, I know that's a challenging issue to talk about, but like these challenging issues will keep coming up unless we talk about them, right? So I think best interest is important for the client no matter what, and it doesn't matter who owns the dealer group or the platform. You need to give advice that meets best interest requirements. And if you're recommending an in-house product, you need to be able to demonstrate those requirements. And that'd be my only concern around conflicts of interest with that. But if you're using, again, a product that's not owned by the dealer group, I think you're in a much, much better position, or if you have a balance across different platforms.
And I think that's a great point, because it's like we've seen enough happen in the last 10 years to know that we're probably going to be reviewing this in 5 years' time and overlaying whatever safe harbor scenario we've got to say, oh, you made the wrong decision 5 years ago or 7 years ago. And we should be learning from that and understanding that, this is potentially going to be an issue for exactly those reasons.
But it's hard because, dealer groups are looking at a different, economic value chain, right? So all the shelf space gone, all the commissions are gone, all the trail is gone. So now, how can they find ways to create value to make the industry sustainable? So I do have some sympathy for it, Morning.
Yeah, yeah. I think I mean, the reality is that dealer groups have to find those models because and there's a lot of advisors that couldn't run their business without a licensee behind them to do a lot of the work. So I don't think anyone wins out of making that dealer group model unviable. But there are other markets, like I think about the US, which have a very clear regulatory regime for a RIA or an independent advisor, and a very clear model for a broker or a vertical model. And it's just curious to me that hasn't potentially been explored here in Australia as an easy to solve issue. Have you any thoughts on why we're not going down that path potentially? Different licensing structure?
Yeah, maybe it's just stage of the evolution and where we're at, and whether we're mature enough to kind of have that kind of conversation around the separation piece. But I'm hopeful that with the quality advice review underway, that may, if product advice and non-product advice is separated, that may change things as well around that conversation.
Yeah, that might be the first step in. Yeah, that might be the first step in kind of trying to look at the vertical integration model as an offset of that. So, when you do split out product advice versus non-product advice, maybe you're one step closer to resolving that issue than where we're at now.
Yeah, it's almost educating the consumer that this is the differentiation versus we know internally, but it's the end users that just don't necessarily understand the rules within which we operate.
Yeah, like I know advisors now who are taking clients and having a completely different type of experience with them. So, for example, say you came in and you had an MLC balance fund, and the advisor said, "Look, that doesn't look too bad. Let's just park the product side of things just for the moment." And then they spend a year kind of getting that client up to what I call base camp, where they might look at your budget, let's sort out your wills and your powers of attorney. Let's get to, what your objectives are and get really clarity around different buckets and things like that. So none of that is product, right? So that's actual financial advice 101 about what's important for that client. And the product part can come later. But I think because of the Corps Act and the way that we've seen that, we've always gone, what is the product from to as the key piece of advice? When in actual fact for the client, it's just about, how can you make something, give me advice that puts me in a better position overall.
I do want to talk about the technology side in a moment, but just to wrap up on a few of these points, I mean, you have both professionally lived through a number of these reviews now, probably a dozen, and you would be aware of probably many of the stakeholders who are considering making submissions to this. So, have you any sort of observations of how the industry should be thinking about how it approaches this review, and maybe some lessons from the past to get a quick and efficient outcome? How should we in the industry be engaging in this process?
Hopefully a collaborative one and not so fragmented as it's been in the past. So, I mean, I understand obviously each stakeholder in the industry has got their own views on how things should be, but I think that's probably what's let us down in the past, of everyone approaching these issues from a completely different and sometimes opposite perspective, rather than agreeing on what the fundamental things we can agree on and pushing those forward.
I would just add to that to say I think advisors have a right to be cynical at the moment, and you see that play out in comment boards and things like that, and so fully respect and understand that. But if people can kind of park that for a little bit and go, this is a unique opportunity to kind of come together and provide that feedback, and then also to think from a practical lens about what are the 2 or 3 things that actually can be done within the current sort of policy and regulatory settings. So I think it's easy to point fingers and blame, and no one would blame anyone for doing that. But now is the moment really for the industry to kind of come together around whatever those ideas are, the top 3 kind of solutions for where we've got to today.
And pardon, I mean, for the people who are a little bit less informed about the regulatory process, can you just maybe talk us through what you think will happen sort of post this review happening? Is there legislation? Is it regulation? How should people be thinking about what this might mean for them as stakeholders?
Well, I think if we just park the review of the Corps Act, so I think the Corps Act component will be how can we simplify Chapter 7 to make it more readable and understandable. If we look at the quality advice review, they're looking at a wide range of issues. Like if you look at the terms of reference, it does include things like fee disclosure statements and opt-in, which from outside the industry they may seem like a small issue, but that's actually quite a big issue playing out with people looking at fixed term agreements and ongoing service. Like we've helped a number of clients think through that piece. So the way that I would see it, obviously it's going to take some time. They're going to obviously have some submissions that are provided as part of that process. There'll be an interim report and then a final report, and then legislation would flow on the back of that we would need to, as an industry, manage. The hope is that what falls out of it in terms of the regulatory settings is simpler and easier, so that there is one set of rules. Now, it might not be that we get to that one set of rules straight away, but that's kind of the hope that we have for the review.
That's it, yeah. Hopefully it sets the scene for further refinements and reform. So, it almost feels as though if we can just get this process started, then it can just be an iterative process of, there's too many facets to it that can be all fixed on day one. And I think we're quite aware of that realistically, but at least it's a step in the right direction.
Yeah. And I think, I guess I'm kind of curious as well. I'm sure some of the people listening to this are also curious about, well, the reality is there is a federal election happening this year, and, seems a possibility, at least, that a change of government could flow through. Are the government regulatory affairs people that you engage with and those institutions, are they, is there any discussion that a change of government would potentially change the way this could head from a practical perspective, or do you feel both sides of politics are broadly committed to simplifying Corps Act and obviously improving advice access?
Look, my view is that both parties are pretty open to hearing that the challenges of small business and trying to simplify what's happened. I mean, I don't think you can ignore the fact that we've got 40% of the advisors have left our industry. Like we should pause on that and just think about that, because it's not just the advisors who have left, but you think about all the front office staff, the paraplanning staff, the loss of knowledge, and we want, and one of the things about Tangelo is obviously we want to have a successful and growing business, but we also want to be part of a thriving industry where new people want to join our industry. So, one of the things we could talk about if we have time is around professional year and bringing new people into this industry to say, like, this is a great industry to be part of. You need to get the appropriate qualifications, but here's how you go through the soft skills and the admin, and this is how we can set you up for success. Now, obviously, that's not happening at the moment, but it is solvable. That's my point before. All these issues are solvable if you get the right people in the room.
And I guess you kind of have to be hopeful that both sides of politics do want, your end consumer to be able to receive quality, affordable and accessible advice. So it would, kind of seem insane if one part decided to go in a completely different direction and halt this. But who knows? We're hopeful that it will still go through in some form.
Well, we know that, it's that accumulator phase, that younger accumulator that are going to be suffering from this because they've probably been dropped off from an advisor because they weren't able to pay the fees. They weren't at that stage. So they'd probably be sitting as an orphan style client somewhere with a product provider. And we know that people just won't contribute to super unless they're guided, because they just don't understand the benefits of doing that. They don't understand the compounding effect. They don't understand the tax-free environment. They don't understand any of that forecasting. So unless they're working with an advisor in some capacity, that's where the gap's going to be. And then, like, not even touching on the underinsurance. So some big gaps if both, sides of government don't address it.
I mean, that's a really good point, Nicole. Like, even if you think about the unadvised, right? So that 80% that never see an advisor, and you think about multiple superannuation accounts, lack of budget, no real objectives, and so, yeah, the tangible value, even from a government point of view, of those people being advised is quite significant from a tax and revenue perspective. So, yeah, like, I just think, everyone wins if they see a financial advisor, but I don't know if that story is getting through strong enough on the back of the Royal Commission.
Yeah. Just to I guess, and we'll sort of transition a little bit into a digital conversation, but there's been a fair bit of media about ASIC taking a closer look at these finfluencers and sort of the role that financial coaches or whatever term you want to use, except for financial advisor or planner, you come up with, has become explosive, unregulated, and as Nicole knows, viral through the use of social media. I would argue maybe taught us a thing or two about how to actually get messages out there in slightly different ways, more interesting ways, but needs to be done in the correct way. Can you just add some comments? Because I have heard anecdotally of some advisors who have, handed in their license but moved to a more of a financial coaching type model, and just potentially some of the challenges you see with that, or how you think the regulator is going to navigate this issue, which is growing.
Absolutely. I mean, for those that have actually handed in their license thinking that, they can provide elements of financial planning advice and not have to go through the rigmarole that the rest of the industry is going through, is probably a dangerous position to be in, especially, once we go through this quality of advice review, and if there is a delineation between, general advice, personal advice, factual information, they might actually find themselves in a position where they should have actually retained their authorization status, and now they're operating in a space unlicensed ultimately, which, agree. It's they've probably made financial planning and financial literacy attractive, and maybe they're reaching a segment of the market that was previously disengaged. So I think for that point, at least the conversation is being had, but it almost feels as though, maybe a bit too premature to hand in your authorization just yet without really understanding, what the new landscape is going to look like.
Yeah, and I'll just add to that I think general advice is the wrong name. So, like, if you look at it, I support what the FPA has promoted around calling it product information. That's what it should be. You're providing product information. So it's not advice. And the minute you give advice, it's actually personal advice. If someone says, what do you think of this fund? And if you answer that question, you're breaching those rules. So I think, still a way to go on that one. And then the other one, I guess, is intrafund. Because I think if you look at the number, obviously everyone's got superannuation, and that should be a way for us to solve potentially for the access to advice issue. But the challenge, and again, there's challenges everywhere, but the challenge that you face there is how do you give effective intrafund advice when it's limited to the product that the client's in? So how can we use that access point but provide a wider range of best interest advice? That'd be an interesting challenge to work through.
And I think that's a really good point, because I think there's two camps of finfluencers. I have a distinct view on this, that I think that we have some who are very well qualified and who've just done really well at getting themselves in the media and educating people and garnishing a really great following. And I think good on them, because they've actually brought a great light to financial advice and they're educating people, but they are licensed, they actually know what they're doing. And then there's others who've been creative, not licensed, writing books and things like that. But the consumers have shown that that's what they want. They want to learn about these concepts. So they are telling people, this is what we want to know. We don't want to necessarily be told it's behind a gatekeeper and we have to pay thousands of dollars to get access to financial advice. So I think there's a couple of different camps with that. But I also think that those potentially handing in their license to go into a coaching role really creates this delineation between strategic advice and product advice. And, advisors are running their own businesses. They've got careers as well. So I know plenty of advisors who would love to not have to deal with product again if they could just deal with strategy, because they love strategy. They love being able to, take a client from A to B and have some great outcomes. But they don't want to have to deal with the product, because they know that that's where all the extra work comes from, that is thankless work that benefits no one generally, and so I can see why some of them have gone down that path. They're going to have to, get a license of some sort if they want to continue to do it, it looks like. But I can understand why they may have done that. And I think that we are at a time where the industry does need to split out. We really need to make some significant changes to, one, let people access information better, and two, for advisors to be able to deliver it in a way that works for them, within the rules, of course. Yeah.
I guess turning our thoughts to digital. So just observation keen to share with you both. Probably in the last 3 or 4 months, we've noticed a huge number of the fintechs who have built direct-to-consumer advice type models, various iterations of the above, from robo investing through to actually quasi-advice models, have suddenly got a bit of a spring in their step because they sense there might be a bit of clear air ahead to validate their product or their business model. But they're still coming up against this sort of wall of, I guess, that institutions, manufacturers are still not quite there yet in terms of either embracing that model or just trying to sort through the regulatory side of how they implement. I prediction for us, I think this will be a huge part of your business moving forward, is sort of advising these fintechs of how to navigate this. Are you engaged in those discussions at the moment? Obviously, not mentioning specific institutions, but how are you thinking institutions are thinking about this? Because as Nicole, I think, said, there's a huge orphan books of clients now to be managed. We have an uncertain regulatory environment, and we have some technology there. What do we do next? What do you think the process is to work through?
Yeah, look, obviously we are chatting to a few of them, and look, I have a bit of a nuanced view here where I look at the overseas environment and then how it applies to Australia. So I think in the UK and Europe and parts of America, you've seen robo advice grow a bit stronger and get a lot more in terms of assets under management. But when you dig a bit deeper, it's actually more like, here's a basket of ETFs based on your risk profile, which is an aspect of advice, but it's not really, as much as the full gamut. So as it applies to Australia, I think there still is an opportunity. And if the answer is the regulatory environment's too hard, we should change the regulatory environment. Because someone getting some form of, I don't like robo, but let's say like technology assisted advice, right, is better than someone not getting advice. So then, therefore, how can we enable that in a better way? Some of the challenges around that would be, for example, if someone's buying life insurance, you get to the purchasing stage and you sort of go, should I go step versus level, or do I want a 90-day wait, or is it owned versus any occupied? So the complexity of our financial system rubs up against that point. So that's like an issue to solve for. But I do think there's a model, and I'll be interested, Nicole and Pete, your views, and Selin, about this kind of almost human-assisted technology model where it's kind of like, can the technology do so much to get it to X? And then we have a conversation piece, and then the fulfillment component, because product fulfillment from an advice perspective is still a nightmare. The product systems don't talk to the advice systems. I don't know why, but they don't. That's a huge opportunity itself, by the way. But do you know what I mean? So like inserting technology in the right stages of the process to have a more streamlined process, if that makes sense.
But it's sorry, I was just going to say, just to add to that regulatory piece, I mean, the regulatory piece as it applies to technology is still the way that you provide traditional financial planning advice. So the fact that, just because you might be utilizing technology doesn't obviate the need for you to provide advice that's in the best interest of the customer or the client. And how do you actually do that when you remove the human element out of it? So it feels as though the regulation hasn't really kept up with technological developments. And that's certainly the conversations that we're having with those providers that are looking at entering into this digital advice space is, are you going to go 100% digital? If you are, these are all the ramifications that you still need to think through. You still need to have a human element that's ensuring that there's advice that's in the best interest of the client. You still need to have a human element that looks at the algorithms to make sure that they're effective. Second tier down from that, maybe utilizing technology to create efficiencies in providing personal advice. So you're not necessarily moving to a full digital solution, but utilizing solution to create a more efficient way of providing advice. So there's definitely, a disengagement between the use of technology and digital advice, if you want to call it that, and where our regulation currently is.
And because they're two very distinct things, and the cost to deliver either of those is very different, and as they should be, because someone's buying a cheaper version of that relative to the stage of life they're at and the needs that they may have. And so I think there should be different legislation for it, for sure. But from my perspective, I've certainly worked with advice practices who are implementing some sort of digital advice solution. And the current stage that our market is at, that it is really difficult to just have that digital solution. There needs to be some sort of hand-holding, hand-off process, that has a human element in there. And I think, to your point, Conrad, it's because our system is so complex and so fraught with making the wrong decision, based on not understanding the legislation or definitions. People can really, think they've got something in place and they haven't, or miss out on something that they should be accessing, because we've got so many, it's so complicated for advisors to understand. I mean, that's why some advisors don't even offer some advice, because they don't understand it well enough to be able to offer it as a service all the time.
Yeah, and there was also some, recent research that I, happened to stumble across where it was talking about, utilizing of digital advice. And when you find that, most of the clients that actually had a personal advice relationship with a human being actually preferred to keep that human being interaction. So I think it's, are we actually building what we think we need to be building, or are we building what we think the client actually needs?
Yeah. I mean, I think the consumer behaviour is not quite set yet, and as scary as some Uber rides I've had have been, I'm still happy that there's a human in the front seat.
Yes,
I'm not quite ready to get into a car without a person. That's probably one way of looking at it. But I think there's some interesting points there. I do want to touch on. I do think in our sector, particularly following the Banking Royal Commission, the leadership in our industry doesn't really get incentivised to take risks and try new things. That's probably an observation. The companies that certainly I'm lucky enough to work with, that they want to do things, but there's this sort of risk avoidance side. But I would say that the thing that kind of concerns me a little bit, and I think this is where businesses like Tangelo have such an important role, is that I don't think, even if we had a clean sheet of paper regulatory wise, that these businesses are even clear on what that model could look like if there was no technology or legal impediments. And I think that is the key. And my concern is, are we actually approaching this review going with a very clear vision of what we could do, if we had this, and this? And I just wonder, has enough thought been put into that potentially? I'm not sure whether you guys have come across businesses with a clear vision of how they would deliver digital advice, but that's what troubles me.
Yeah, I tend to agree. I mean, with some of those bigger players, no one wants to be the first mover, because the consequences of getting it wrong are just so massive that they're not willing to take that risk. Maybe if the regulator was, not to say lenient, but was, had kind of given enough space for people to try and innovate in this space, maybe we would have actually by this stage had some sort of a solution. But like I said, it's like, I think the risk of getting it wrong and kind of being in an enforceable undertaking situation or in the front of, a newspaper is just too big of a risk for some of these institutions and businesses to take.
I think the other point I was going to make is a lot of the regulation that we've seen has been sort of tacked on. So if you think about the DDO changes and the breach and incident changes, like well-intentioned, but had provided no benefit to customers at all. And in fact, have added cost and regulation to licensees who are still struggling with how to deal with it. So then you look at that and go, well, the actual answer, to be honest, and people probably don't want to hear this, is tear the whole thing down and start again. So like a client comes in, what does my file note look like? How do I do AML? Would you still have, a fact find that goes to a paraplanner that comes back with an SOA 2 weeks later that would go to a product provider to fulfill 3-4 months later, waiting for the rollover? Like, you probably wouldn't do that, right? You'd find a better way. So yeah, I think, Pete, you're right. Like, are we asking the right questions? I don't know, but hopefully it's going to be better than what we have anyway.
Yeah, I mean, I totally agree. 2 to 3 years ago, we wouldn't have even been talking. We were railing against robo advice. Like, people hated that, and now advisors are implementing it. Now everyone's railing against finfluencers. Well, it's getting people to actually take control of their financial journey and to invest and do all those things. So, maybe we should be embracing more of that. Who knows?
Yeah, and you're ultimately targeting a particular segment of the market that, number one, maybe couldn't afford advice, number two, doesn't need as comprehensive and hand-holding as advice as what comprehensive solutions may be. So there's absolutely an opportunity there. It's just someone taking that chance and I guess starting it, really.
I guess probably a good note to finish on. I mean, a lot of businesses often, when these reviews happen, go, and you guys probably hear the excuse all the time, oh, we're not doing anything until the review comes through, which is, let's face it, years away potentially. I think business doesn't work like that anymore. You have to be constantly innovating. I mean, just a bit of advice from you both as to what you'd be telling licensees right now who may have that mindset as to how they should actually be writing their business plans for the future, and some guidance you can give there.
Oh, look, the main theme is control the controllables. You know, there's things that you can be doing right now to work smarter and faster. So, like, none of the regulatory uncertainty means you can't speak to your advisors with a proper two-way street. None of the regulatory uncertainty means you can't sort of establish really effective guidance and tools and templates to support advisors to give advice even within the bounds of the current regulations. So don't be overwhelmed by the complexity, and just take steps forward to say, well, this is my plan for the next 90 days, and this is what I'm going to deliver, and just deliver to that, and control the controllables would be my advice.
Yeah, absolutely. Yeah, and agree with Conrad on that. And just focus on no regret moves. I mean, trying to create efficiencies in your business, trying to map out your processes and finding systems to enable you to do that more efficiently and effectively so that you are spending better quality time in front of clients rather than worrying about all the things going on from an admin perspective in the background. They're absolutely no regret moves.
And I'm going to go out on a limb here and ask the compliance leaders of the industry to make some predictions. We love making predictions in technology because they quickly get forgotten about if you're wrong, and if you're right, great. But I don't know. I know I'm putting you out of your comfort zone here, guys. But any predictions? I mean, we're just about to start a new financial year in 3 months as to what you would see play out in our sector in the next 12 months.
I think we definitely see a focus on those mid-tier licensees getting bigger. But off the back of that, we also see the self-licensed or, the individual license approach growing as well. I think in saying that, you might actually find that some of those smaller groups end up maybe consolidating, not so much merging, but maybe consolidating to get greater scale. So they're not having to solve for the same issues in thousands of different ways. I don't know, maybe it's more of a wishful thinking rather than a prediction, but hopefully some, easier to navigate regulatory frameworks so we can actually start to innovate in this industry.
Yeah, just to add to that, Pete, I think a lot of companies are going to invest in efficiency and technology, and I actually think compliance by design, someone's going to crack it. So in other words, you can't go to the next stage until you do X. So like if you haven't done your file note, you can't do the other thing, right? So we haven't got that yet, but someone will crack that, is my view. I think also some of the issues that we know are still there in the industry will come up at some point. So we've spoken about vertical integration, things like sole purpose tests probably going to come out of the woodwork at some point because we know it's being breached at the moment. And then the last one is someone's going to grab hold of professional year and say, here's a path forward, here's our integrated platform to bring new people into the industry, and this is a fantastic place to work.
Yeah, critically important. We still have the fastest growing retirement savings pool in the world and the slowest growing advice industry. It's crazy. So good shout out.
Yep.
Well, that's a great note to finish on, guys. Obviously, you look after a lot of corporate clients, but if anyone wants to get in touch with Tangelo, how should they do that, Conrad?
Yeah, the website, tangeloconsulting.com.au. Obviously, we're on LinkedIn and look really keen to support licensees of all size, just navigate the problems that they've got in front of them. We're completely independent and we're just here to help.
Yeah, and as I said, my prediction is you guys will find yourself working with technology companies as much as you are licensees in the future. I think is, which is a great thing, right? Because for me, that is the holy trinity of having advice, technology, and governance together, and you will get good outcomes by doing it at the same time, not as an afterthought. So,
exactly right.
Excellent. Well, thanks again, Conrad, Selin, Nicole, as always. And look forward to the next installment. I'm sure we'll have Tangelo back as the Quality Advice Review and the Corps Act review plays out towards the end of the year.
Awesome.
Thanks again, guys.
Thanks, mate. Appreciate it.
Thank you. Thanks.
Cheers.